Alrighty. So obviously everybody's here to learn how to leverage tax planning in 2023 with our guest speaker. Hopefully I say this right, Tiara.
Yep.
So as you can see, she's well accredited and has got some amazing experience. So she's got a bachelor's and a master's. Looks like she's been doing this for almost 11 years, and she has her own firm. Um, so I'm going to go ahead and turn it over to her. And without further ado, Tiara, take it away.
Okay. Sorry.
Oh, you're fine.
Are you you're sharing it with me or already?
Yeah, so you are the co-host, so you can go ahead and screen share your presentation.
Got it. Okay. Zoom like went away. Okay. Share screen. Okay. Thank you for having me. Anne has talked a lot about your group, and I'm definitely honored to be here to talk to you about some tax planning for 2023 and beyond. Um, hmm. So I have like this screen in the middle of my, sorry. Okay. So as you can see through my credentials, as Derek has mentioned, I've been working in public accounting for well over 11 years in the national and regional firms, and then broke out in 2016 to start my own, along with my partner. I am a certified public accountant with a master's in taxation, and I specialize really more with high net worth individuals and those with real estate investments, as well as family-owned businesses, maybe even closely held entities, as well as entrepreneurs. I do currently reside here in Northern California with my husband, Charles, who is actually also a CPA, as well as my daughter, who's 3, and her name is Issa. So just kind of a disclaimer, general disclaimer. Of course, as anything I mention here is not to be misconstrued as tax advice, investment advice, even securities advice, in any way or manner. What I'm going to go through today is an introduction to some tax forms that you may or may have not seen. Definitely a few you've definitely seen, and then we're going to jump into doing some how to best position yourself to tax plan and strategize, starting with 2023 and then going forward and beyond. And I'm also going to kind of touch up on a little bit of the concept of a real estate professional. I know talking with Anne all the time, this is something that's come up in this group, and maybe her being very well versed with other connections in real estate. A real estate professional is something that comes up as in topics. So I'm going to touch base on all of these, and then we'll have the Q&A later to answer some questions. So this is kind of just a break, kind of a icebreaker to see what forms you are aware of and what you know about them. So we're going to kind of touch on all these: the 1040, I-9, the 1099 miscellaneous, as well as the W-9 and the 1099 NAC. So I'm going to give you some clues about these forms, and then if anyone can just unmute yourself, raise your hand or whatnot, just let me know what the right answer is, and then I'll move on to the next form. So the first form and the first clues are: whenever you start a job, you get this, not as an employee though. You list information about yourself and your family, and this is what determines how much money gets withheld out of what you actually get paid. So does anyone know what this form is? LaDonna.
Okay, I think I'm starting with the easy one. That's the 1099.
What kind of 1099?
Oh, I did start with the easy one. Well, I'm going to guess, let's see, information your family term, how much money gets taken, how it gets paid to you.
If you look
NEC?
at the bottom, I think
Yeah,
there's
the
two
bottom has
options.
the options. But I'm
Yeah.
gonna actually stop you there. That it's not a 1099.
Oh, okay. Oh, I thought I was taking the easy one. All right.
Anyone else have a guess?
My guess is I-9.
I-9 is pretty close, but it's not the I-9.
W-9.
It's the W-9, yes. So W-9 is really for those who are not employees, and then there's a W-4 that is for an employee. So thank you for participating. The next clue is this form is completed every April, but can be extended. Anyone can use me, but there's a lot to fill out. LaDonna, are you raising your hand?
No, I forgot to take it down. My bad.
Okay.
Is it the 1040?
Yes, that's the easy one. Everyone should know that they file a 1040 each year. But just so you know, there's actually different types of 1040s. There's a 1040 SR as well as a 1040 NR. So, but this is the regular 1040 is usually what everyone fills out. The next clue is this form is received in January. You get me if you are an independent contractor and paid by a company, and you normally don't get any with taxes withheld. So you might actually owe taxes with this payment that is filed on this form. Anyone have a clue? Trin, Kevin?
1099 miscellaneous. Or am I?
Close, but it's not the 1099 miscellaneous.
And it's 1099 NEC.
It's the 1099 NEC. So this is actually pretty new. They started requiring it for anyone who's an independent contractor trying to basically run their own business. And so you get paid or you get this get filed to the IRS for you, and you get handed this form for your taxes. So the next clue is whenever you start a job, but you are not living in the US, or you're moving to the US, or you're an international resident, you have to prove that you are eligible to work in the US. And it requires a few forms of identification to complete this form. Anyone have an idea of this form?
I-9.
Yes, this is the I-9. Thank you. And this is the last form. You received this in January as well. You get me if you are not an employee, but if you're paid rent or other types of income, this is the form that you receive.
The 1099 MISC.
Yes. Yes. So here you can see that there are different 1099s. There's actually more than just these two. So this is just an icebreaker to kind of introduce you that there are so many different forms, different schedules within forms, and you want to make sure that if you receive one, you kind of understand why and also what to do with it. So thank you for participating. All of your clues were solved, and we'll move on to what we're going to talk about today with 2023 and beyond tax planning. So I want to start with these kind of these categories. First, we're going to know your, I'm going to talk more about why it is important to know your tax situation, and then how that's going to help you become more informed, and then get you organized for tax season, and or even trying to find a tax professional to help you. So first, we're going to move on to knowing your tax situation. So a lot of people don't really know this schedule, but they've kind of seen parts of it or understand parts of it. So, I mean, the main thing about your own tax situation that you want to start with is, what tax status are you? Are you single, married, filing separately, joint, head of household? And then where do you lie on this schedule here? Because in the US, we have a graduated tax system that can be very complicated because it changes every year. It can change year to year just for your situation itself, as sometimes income drastically changes up or down. And so you kind of want to understand where you lie here on this schedule with what tax rate you have. So what is your marginal tax rate, meaning for every additional dollar that you earn, what tax rate is being applied to it? you want to understand then if you actually make $100,000, you want to know that part of it is actually taxed at 10%, part of it at 12%, and then the rest at 22%. So this is important also when you get a raise, you get a bonus, you're changing jobs, and you're going to get paid more. Where does that then leave you if that's going to change into a higher tax bracket, and which one? Your actual tax bracket may not be the same as your effective tax rate for that year. And what I mean by that is if you have major deductions or credits, your effective tax rate could actually be lower. And if most of your income is coming from like qualified preferential income, such as dividends or capital gains, you might actually not be even taxed at any of these rates and would receive preferential treatment at 0% or 15 or 20%. So it's very important for all of us to kind of first know our own situation and start with this schedule. So tax status, tax bracket, this is also just for federal. If you are, depending on what state you are, if you're international, where are you in that state's tax rate schedule? Because here in California, if you're at the highest tax bracket for federal, 37%, you're probably also paying another 11%, 9% just in state taxes. So you're close to paying about 50% or half of your earnings is getting taxed at 50%. So once you know your tax situation, then this will help you to navigate that, or what questions you might want to ask a professional, or even how to strategize for later and get better informed about your situation. So be sure to know what your federal and state, your marginal rate, your bracket, and then actually your effective tax rates. So this is going to be a very good premise for you to then to become informed. So this schedule here, and what I go through with every single client that I have, it's basically a comparison schedule from year to year, because changes, every person has different tax situations, but your tax situation might just change year to year. Your filing status can change from married to being single, maybe your spouse had passed, or maybe your dependents have changed. You went from 2 to 0 or 0 to 2. And even your income wages might change. If your investments, you might have sold a lot of stock in one year with gains. This year's a bad year, and now you have losses. Or maybe you retired and now you're getting Social Security income and retirement distributions, or you sold a property, a rental property, or you bought a rental property. So here in this schedule, a lot of income items can change rather significantly, and then therefore change your taxable income. So it could be income items, or it could be deductions, or even just adjustments. Maybe you're self-employed now and you want to quit your employer and actually go out on your own, and now you're self-employed. So what additional deductions may you have now from compared to last year? So itemized deductions can change. You could be very close to the standard, and that might be more beneficial for you. So this is a schedule that's kind of good to know, to see for your own situation, and not just the income and deduction items, but then where are you in your taxable income? Where are you in your taxes? What are your tax rates from year to year? What credits are you being able to take advantage of year to year? Or even, are you withholding enough with your wages or 1099 income, or do you actually have to make some estimated tax payments? So here are schedules that kind of will give you an idea of what you can do for yourself to help you understand your own tax situation. So again, this is a great place to start to then become informed, and then to have more educated questions when you do talk with a professional. It doesn't have to be just a tax professional. It could be your lawyer. It could be a trust lawyer. It could be an estate and trust lawyer. It could be your financial advisor, or even your employer, to kind of have better have a better idea for benefits, where your income threshold lies, because sometimes when you're making too much, there are certain benefits that will then be limited to you through your employer. So this is a great way, basis for you to start understanding your situation so that you can then be ready to have educated conversations with your tax professionals or other professionals, and then start strategizing for tax season. The next thing to do is get organized. If you haven't connected with a professional regarding your finances or your taxes or even wills and trusts with the lawyer, connect with them now. Try towards the end of the year is usually when things are kind of wrapping up, especially on the tax side of things. We're trying to make sure we're ready for tax season come January. And so before that is always the best time to connect with us. That way we have you on our radar, and we give you all the information that you need to get ready for your own tax filing. So that could include also this questionnaire. Is something that I give all of my clients, to a bunch of yes or no questions to make sure there's nothing that we will miss. A lot of times clients don't even know that there's a tax implication, such as giving more than $16,000 to a child. They don't realize can trigger a filing, or not having health insurance, or maybe even opening up a foreign bank account and putting more than $10,000 can trigger a filing requirement. So I give a questionnaire like this every year. It does change because the tax law changes, and this is something that will help also get you organized. But what I do want to share with you is how to get organized. This is something that I've seen my clients do. I do have a portal, and they can organize their forms this way with different folders. If they have multiple W-2s, they have multiple jobs, maybe taxpayer and the spouse, or different 1099 investments, they can kind of organize it this way: one from Charles Schwab, one from Fidelity, one for cryptocurrency. Maybe they have a different 1099s for just retirement distributions, or multiple rental properties, how to get organized with all your receipts, your property management reports, or even a QuickBooks file that you keep. If you own a business or a few, how to then make sure you're gathering all the information and having it all in one place, because really you're not only just getting organized for tax filing, you also want to be just as organized if you were ever audited. An audit can come years later, and if you weren't nicely organized a few years before, you definitely will be disorganized 2 years later. So it's good to kind of start that habit now, and what works best for you is definitely key. Keeping track of also deductions and even childcare expenses to get a credit. Keeping track of all those receipts, the payments out, the reports that they give you, just to verify all of your deductions that you're taking on your return. Also, along with a tax advisor, you want to maybe even connect with a bookkeeper if you haven't already. Sometimes even a property manager. If you bought a new property in a different state, or you started a business, you want to kind of get ready with your financials that way and connect with a bookkeeper. You also want to know your tax deadlines. Sometimes, like 1099s, if you have to file them yourself for any contractors that you hired for your rental properties, you might be required to file a 1099 if you paid them more than $600. And that is actually due in January 31st. So if you're also having a pass-through investment that you are, a tax return is filed for that entity, that's due in March. And if you have any trusts or estates or different types of forms have different deadlines. So it's definitely important to know when those deadlines are and you are meeting them. So in terms of tax law changes between 2023 to 2024, I do know that a new 1099 is going to be more prevalent. It's called a 1099-K. So if you were paid with any credit card payments, they are going, or even like PayPal, they're gonna, if they paid you more than $600, they have to file this return for you and give this form to you. So you'll have to know what to do with that form. So just be on the lookout for any 1099-Ks that you might be receiving, and make sure you understand why. And if it's a mistake, definitely you want to try to see what you can do to correct it. Another change is that solar credit has been extended to beyond, I believe, 2034, and the extension or the solar credit percentage is now 30%. Another change in 2024 is you can actually get a credit for electric vehicles that are used. If you purchase them used, you might be able to get take advantage of an electric vehicle credit as well. So that is all that I have for kind of getting ready for 2023 and 24. And I now want to touch base about what a real estate professional is. Just to simplify, it's called a REP. And I know ADPI itself is, active duty passive income. So rental properties are considered passive activities, even though they are essentially a trade or business. But for tax purposes, they're considered passive activity. And so what exactly then is a real estate professional, and why should you become one, and how do you become one? So we'll touch base a little bit about each of this going forward. So what is a real estate professional? One who primarily makes their income in real estate and who is not simply just investing. So you're not just collecting rent, and you're not just paying a property manager to manage your properties for you. You're actually actively involved, and we'll go into more about what that means. So should you even become one? A lot of times you probably heard of it, and a lot of people are always saying like, oh, you should probably try to become one, but can you? And is it even worth it? So a real estate professional will help you take passive activity losses. So if you have passive activity losses, that's one thing, but are you even limited with those losses? So if your gross income is above $250,000, then you're most likely being limited in taking any of these losses that you have. So if you do have passive activity losses and they're being limited and your income is over $250,000, then it might make sense for you to become a real estate professional. And so now, how do you become one? To qualify, there are two major tests. And the first test is really kind of two parts to it. So the first test is more than half of your personal services time. So any time that you spend working, really, more than half of that time has to be spent on real estate, property, trades, or businesses. And on top of that, it has to be more than 750 hours of service related in that tax year to be related in that real estate property trade or business. If you're able to meet this first test, then you can move on to the second test, which is whether you actually materially participate in the rental property that you own. And it doesn't have to be necessarily the one that's generating the loss, but and materially participate means more than 500 hours. So it's definitely a lot of considerations to think about, but the initial considerations, if you have a full-time job outside of a real estate field, you may not even meet test one. So you more than likely will be disqualified from being considered a real estate professional if you already have a full-time job as an engineer outside of real estate. So if you are also married, to be able to meet these thresholds or these tests, one spouse alone has to meet it. So if you're thinking collectively, your time together will get over that threshold, it has to be one spouse alone to meet that test. If you're an employee in real estate property activities, the time that you spend actually doesn't count unless you are a 5%, more than 5% owner. So if you were actually working in a business as an employee, that time is not actually going to count unless you're more than a 5% owner. So what kind of real estate activity are we talking about? So real property development, construction, acquisition, conversion, rental operation, management, leasing, or brokerage is all going to be considered real estate property trade or business. So again, test one is really where most taxpayers disqualify. So if you can't, if you kind of count up all of the hours that you spent and you can't meet any of that, meet beyond that test, then you probably won't be able to be considered a real estate professional. And when even you go beyond test one to test two, if you do materially participate in more than 500 hours in your rental properties, you could actually elect to group your properties together to be able to meet that threshold. So you don't have to do more than 500 hours of material participation in just one property. You can collectively group them, and then all your time together can be met to go over that threshold. So there's a lot of things to consider. Again, these are very just initial concepts because a lot of the times a lot of taxpayers just don't meet the threshold or even pass the first test. So if it does go beyond where you do meet test one and test two, there is still a lot of other criteria to meet and other concepts to consider, such as if when you're grouping properties, does it make sense to group certain properties or to leave out some properties? Because when you're selling one property versus another, or if you have out-of-state properties or properties in different states, then it might not make sense to group them. Material participation alone, like what does that time even mean? So that could also be some consideration, because I believe even hours spent on investing activities is not going to be considered material participation hours. So there's definitely a lot here that I unloaded to you. I'm sorry. I tried to meet the 30-minute mark, but kind of a recap, we went through those tax forms together to see, which ones you're aware of, what's coming, how to then best identify what your tax situation is to get ready for tax planning for 2023 and beyond, and then get educated to then be able to ask the right questions, connect with the right advisor. And then we also touch base about what is a real estate professional. So thank you for your time. I'll then take it over or bring it back to Derek.
Awesome. I appreciate the presentation. I'm going to go ahead and switch the screens back. And we are going to open up the floor for some tax questions. So I've actually got two. All right. So come on. Apologies, my computer's running a little slow. All right. Can everybody see my screen now?
Yes.
Yes.
We got
Perfect. All right. Let me pull up the chat because I have some questions. So I've got Kevin from DC. He asked, how do I determine whether I should file as single or head of household?
How do you determine whether it really just depends on whether you meet the criteria for head of household. That is a more beneficial tax status. And then, so there's a series of questions really to see whether you can meet that criteria. And then I would look also at your tax situation. Usually head of household is more beneficial. So if you can meet that, the criteria for that, I would probably go with head of household.
Kevin, feel free to unmute yourself. and ask any follow-up questions you might have.
Okay, yeah, no follow-up questions, but I will, I guess, look into the criteria. I filed as head of household before. I don't know if like I would get flagged or anything, but nothing came of it. So I don't know if that like means I'm good to go and I should continue to do so, but I'll have to look into the criteria. I didn't even know that there was criteria for it.
Yeah, there is. And there's even a series of criteria, even for a tax preparer to file you as head of household, to make sure that we ask the right questions. So yeah, definitely look into that.
Okay, thank you.
You're welcome.
Awesome. Hopefully that answered your question for you, Kevin. I also have another one from, I hope I don't screw this up, Aladino. Do you have to file a 1099 if work costing over $600 is paid to a company rather than a contractor?
So that's actually a very good question, because the requirement to file a 1099 because you paid someone $600 or more is you have to actually identify whether, I believe I get so the W-9 form that we went over, that's what you would give to any contractor that you hire before they even start the work. Because a lot of times people want to work under the table or they want to get paid cash. They don't want to give you their information because they don't want you to file a 1099 for them. So in that W-9 form, when they give it back to you, is all their information, but they specify how are they operating under, whether they're a S Corp, a C Corp, an LLC, or just an individual. And that's what will determine your filing requirement, whether you have to file that 1099 on their behalf. But you have to give that W-9 first.
Awesome. Aladino, again, hopefully I pronounced that correctly. Did that answer your question?
I'll jump in real quick to clarify. So essentially, you stated all the speculations and the forms required prior to getting the work done, and then after the work is completed. My question was more specifically, if one were to get the work completed by a company that you were to say, "Hey, I need to get this work done," and a company does it versus an independent contractor, do you have to file a 1099 or? How does that work? Or is it required or
Well, that's what I mean about the W-9. Like they may be a company, but they might be just doing business as. So they could be an individual, but operating under a name that sounds like a company, but really they could be an individual, they could be an LLC, they could be an S Corp, C Corp. Like you don't know until you actually give them that W-9. And depending on what type of entity they're operating under, that's what will determine your filing requirement. Does that make sense?
Yes, it does. So essentially, it's going to be one or the other, depending on who you're working with and their structure. Kind of, sort of?
Yes, it depends on their structure, but you need to give them the W-9 in order to determine the 1099 requirement.
Gotcha. Makes a little more sense. Thank you.
I'm actually going to piggyback on this because it's a nice segue into my question.
Sure.
If you have a property manager and they are the ones contracting out the work, so you use the property manager hires, a roofer or whatever else, and you pay through the property manager, do you have to provide 1099s, or is that the property manager's responsibility?
That's a good question. I would say ultimately it's you as a landlord's responsibility, but they might actually handle that for you. So it really depends on the property management company.
Okay, so that's something that should be when you're discussing contracts with property managers and whatnot, that's a question you should ask them to clarify if they do that or not.
Exactly.
Awesome. Let's see what else we got. Charmaine Dunn. Again, hopefully I I'm terrible with names, so apologies if I am messing anybody's name up. Was asked, can you recommend a easy to digest book or website, podcast, something that we could utilize to learn more about tax preparation without feeling overwhelmed?
Wow, that's a question I've never been asked before. I guess it really depends on, where you're starting from. Is this your first time preparing a tax return for yourself? And why is it exactly overwhelming? Is it because you have a business or a new rental property? Because then that's where I would say it depends on your situation in that sense, because they could give you advice, you could read a book, but it might not pertain to you at all. And I want to say TurboTax is pretty easy with just helping you answer questions, and then they can kind of file all the forms for you if you have if you feel overwhelmed and you're just not sure exactly what you're doing. Sorry, I don't have a better answer for you.
No worries. Thank you for that response. And I do my tax returns annually, but I was just looking, especially for the group and entering into the real estate realm, just something that maybe we could continue to learn from and gather information from. Your presentation was amazing, but something that we could continue to look at and even research further into. Even like going on the IRS.gov website has a lot of helpful information, but there's so much that it can sometimes get overwhelming. So I was just wondering if you knew something from that you can start at, when you're just getting into this, or even if you've been doing this for 30 years, that you can continue to utilize to gather more information. And of course, with the tax laws constantly changing, something that you knew that could be a great go-to to stay up to date. If any of that I just said made sense.
No, that makes great sense, actually. And you are right. But this is what makes my job available and secure, because there is just so much information out there and so many resources and so many people that are willing and more than willing to tell you and give you tax advice for this or that, and how then to you take that and apply it for your situation is definitely complicated. But again, this is why I have my job. This is why I'm a tax professional, to help you navigate that. So honestly, I would say speak to a professional, because one is, it's not just about someone who knows what they're talking about, but also ethically is kind of as a CPA, like I'm certified public accountant, I'm held to higher standards in terms of ethics. And so I'm definitely wanting to give you the advice that makes sense, but for your situation, but I'm not trying to scam you with anything as well. So that's where I would say a professional is going to be held to those kind of standards. And that's why I would suggest that.
Okay, thank you.
You're welcome.
I'm gonna have to make a plug, because I had a little joke about that as well. I was like, this is why you hire Tiara, and that way we can all just sit on a beach and she has to deal with research and all this stuff for us.
Yes, I love research.
All righty. Next question is from Whitney. Does working on real estate acquisition count towards real estate professional status hours if you don't actually own the property yet?
So no, I don't think so. The investing part of it, like looking at different properties, or even like the time spent on trying to get a loan, doesn't count, unfortunately.
Whitney, feel free to chime in if you have anything else.
Oh no, thanks for answering my question, Tiara. I kind of suspected that as a as I'm working on purchasing multifamily properties, I spent a lot of my time on acquisitions. And so this question has come up a lot in groups I'm in, like, hey, all the time, which is a lot of time looking, finding, funding, all that work doesn't count. So do you confirm that? I appreciate that because that's the bulk of what I do at this point. So thank you.
Yes. And that's why, I mean, that's why they kind of have strict rules on this, is because it's very, I mean, it could definitely take a lot of time doing that. And a lot of people try to get away, even like looking for paint colors. You know, it has to be reasonable in a sense. So it's kind of hard to quantify if that's really truly the hours spent. So that's why they say no.
So would you say like it's until that property has closed that you can't count hours until like there's a property that's owned and you can specifically tie that work to a certain property? Like, is that a fair statement?
Yeah, I think that's pretty fair. I mean, there could be even a gray area when it gets into escrow, but I would have to look into that more.
Thanks, Tiara.
You're welcome.
Next question for you. I'm quick firing these at you. Comes from I should know this. She's one of the hosts. I'm terrible. My
Wait.
property.
Yes, terrible, Derek, terrible.
Hey, I'm sorry. Okay, you highlighted it. I'm always gone, so I'm terrible with people. My property manager says her accountant does the 1099s for vendors. Is there still any tax to file or to report that we need to do on our end?
If they file a 1099 for you or on their behalf, on your behalf, or if they have kind of like a policy where because they're paying them directly, and therefore they're filing the 1099 through themselves, through the property management, then you're fine. You shouldn't have anything else to file.
Thank you, Tiara. And
you're welcome.
So, my other question is, we pay property manager every month, and accumulated amount over in 1 year will be more than 600. So do we give our property manager a form or something?
Yep, your property manager company is part of that requirement. So yeah, I would give them a W-9 just to make sure you're covered if they are. I mean, usually they're operating under some form of entity. And so they might be a corporation that you're not required to file anything, but that W-9 states that, and that's your record to show that you didn't have a filing requirement.
Gotcha. Thank you so much.
You're welcome.
That was a good question. I would not have assumed that because obviously most people, I'm assuming, they pay for their property manager out of their income, their rents, before it gets to them. So I would not have thought that.
Yeah, but it's separately stated on your return as management fees. So
Yes.
I would say any expenses you should think about your income threshold like over the $600. Even giving me a 1099 as a tax advisor, doing your taxes, if you're a company or a business, or you're as a real estate even as a landlord, you should be filing a 1099 for me.
Does anybody here like taxes? They're a lot of fun, right? These are amazing.
This is why I just keep Tiara in my back pocket. That's why I don't have to worry about these things.
Well, yes, not all of us have a family relationship that allows us to do that. So
Oh, trust me, she charges me. I do pay for her services.
hopefully it's double. That's only fair.
It should be.
All right,
Jared,
Whitney.
you and I are going to have a conversation after this.
That's all right. I'll put you on mute. Whitney has her hand raised, so I think she's got another question.
Yes, I have one more question about the reps.
Sure.
I just wanted to clarify your recommendation for folks that are thinking about going that direction. I'm recalling one of your slides that said it wouldn't really make sense to file as a real estate professional unless you're getting limited on your passive deductions. So like until you meet that point where you're not allowed to take all those losses. And there was something about a 250,000, what is that, qualification for your income? Can
Right.
you elaborate on those a little bit more?
So it's actually connected. So if your adjusted gross income is over and it depends, I put 250, but actually it's 200,000 even for a single status. But if you're married filing joint, I believe the threshold is 250,000. So if your adjusted gross income is over that and you have passive activity losses, you are limited usually.
Limited in
taking those losses.
Okay, so at that point, you should consider becoming a real estate professional?
Right, that would be a reason to become a real estate professional.
So for folks who are filing under 250,000, it wouldn't really make sense. Am I?
Well, you have to look at your losses. If you're being limited at all in any other way, I mean, I just kind of gave usually in the income threshold alone, it will mean that you are being limited in those losses. But I mean, maybe there could possibly be something else that could be limiting it, but that's the main item, is just your gross income. So okay. One is your income threshold over $200,000 to $250,000, and do you actually have losses that you're not taking?
Okay. Thank you.
You're welcome.
So the awesome thing about being a host is I get to piggyback on everybody's questions. So I'm going to actually piggyback on this one as well.
Sure.
So the $25,000 passive activity loss limitation, the maximum amount, can you kind of explain that to the group, and how you qualify for that, and what the AGI limits are for that?
That's the AGI limitation of the 200 versus 250,000. So okay. Usually if your income threshold is below 200 or 250,000, you can take up to 25,000 of a passive activity loss. If your income is above that, then that starts getting phased out.
Awesome. And what are the, and again, this is for the group, what are the requirements as far as participation in order to take those up to that $25,000 loss?
And so in order to take the $25,000 loss, what's the criteria?
Yes, ma'am. So what do you have to do as far as like?
Just make less than $200,000.
Okay.
And gross.
Derek, I have a question whenever you get a chance.
Sure.
I think that took care of my question. So again, that was for the group. So we were kind of talking about that. I know the majority of us probably meet that threshold. And some of us maybe bump it up against the 200 or the 250,000. But the majority of us, I think, if we have rental properties, are able to meet the $25,000 requirements. So
okay.
That Sherry, go ahead and ask your question, please.
Okay, pardon me for not putting it in the chat. I'm out driving. So for the group, well, first, thank you for all this valuable information you're providing. I love hearing tax professionals speak their language, their love language, I call it. But for the group, could you communicate how qualifying for a real estate professional would be beneficial when there's one spouse that's working and one spouse is not working, how they could understand the requirements and use it to their advantage tax-wise if they are real estate investors.
So in that regard, the spouse that's not working has the opportunity to then try to meet the test criteria to be a real estate professional. So the spouse that's working full-time will not be able to meet those tests. So it would be then, I guess that provides an opportunity for the non-working spouse to then spend most of their time being able to then meet those tests. Does that make sense? Does that answer your question?
Yeah, I was just trying to help the group understand that, you know, sometimes overseas there's a spouse that's not working, but they have a real estate portfolio, and there's still a way to maximize their finances tax-wise if one of the spouses is able to qualify as a real estate professional, because sometimes just your mere depreciation numbers, if depending on your portfolio size, will be significant enough to make an impact on the actual taxes that the W-2 earner is paying.
Yes. So that is a little bit more complicated when it becomes like joint property, but one spouse is working and one spouse is trying to become the real estate professional. So there's definitely actions that you can take to try to show that your position can definitely count towards meeting those tests. So I would definitely try to explore that a little bit more.
Awesome. I think we've got time for one more question. I don't have anything else in the chat, so if somebody wants to take that last question, just feel free to raise your hand real quick. I'll give you guys a minute or two to do that. No takers?
I have a question.
Oh, Julie.
Yes. Thank you, Tiara, so much. I enjoyed the presentation. I don't speak the tax love language, so it worked really well and I learned a lot. So if you're currently a real estate professional, but then you start to open up another business, how will that affect that status? Like, are you sort of just subject to like not take a wage and just receive distributions to keep your real estate professional status as far as tax concern? Like, what are some of the ways?
I'm assuming starting a business is not going to meet the real estate field. Is that right?
Like, if you want to start a business outside the real estate realm.
Okay. Yeah, well, it is year to year, the classification for real estate professionals. So if you start, I guess you would just have to keep a log of both activities, and truly show that your hours spent is still more in the real estate field versus the new business.
Okay.
And that might be hard to show, but I mean, it's not impossible.
And then like also the other would not taking a wage, rather like distributions would be another way also.
Right. Yeah. So I guess it would depend on what type of entity that you were forming for that business. If you were just simply a sole proprietorship, you wouldn't need to take any wages. So you would just show it as a Schedule C and just differentiate the time spent.
Okay.
I mean, numbers really show a lot. If you're generating a lot of income under that sole proprietorship, it could be a flag for your real estate professional status. So I would try to understand that more.
Okay.
What the parameters are. You're welcome.
Thanks, Julie, for wrapping up our questions. So I've had up the questions screen for quite a while, so everybody should have seen that while questions were being asked, and hopefully taking down the our speaker's contact information, so that if you have some more specific questions or would like to speak to her about possibly doing your taxes, that is how you can get in touch with her.
Yes, email is the best way to reach me. Thank you.
You don't want to put your personal cell phone up there for us to call, since we're all the way across the world, and we can call you
No,
at like
I made
2
that
o'clock in the
mistake
morning.
already. No, I made that mistake once already.
Oh, but that was family, right?
No.
All righty. All right, so at the end of this, when we close out, you guys will receive a quick survey in Zoom. If you could take the chance to answer that, we would greatly appreciate it. I think it's 7 questions. It helps us put these events on and focus them to the audience a little bit better, so that we can provide better content for everybody that's participating. All righty. Anne, I'm gonna turn the floor over to you because this is your wheelhouse.
Thanks, Derek. So one of the things that we always put, so this has definitely been a great event, right? You've had the opportunity to get some education, you've had an opportunity to network. And one of the things I always try to tell people is don't let that stop here, right? Yes, this is just one event, good stuff, but hopefully you've had the time to connect with some people, exchange some contact information, and meet them directly. But another way, if you would like, is we actually went ahead and started our Asia Pacific region Facebook group. And so under the ADPI, the Active Duty Passive Income, there's that main page, right? But we are now a sub page to that, specifically for all of us who are in this part of the world. And the reason why we did that is because we found that anytime we had questions that we wanted to share in the main group, a lot of our questions or things that we were trying to get really got buried by a lot of what was happening for all the people who are stateside. And so doing something that's more friendly to our time zone, I think, is really key. And then, of course, one of the things that brought us all together is we're so small. Like right here, in Guam, there's only a handful of people. In Misawa, Derek, how many people in Misawa have you met that want to talk about real estate or finance or ways to generate passive income?
Like 5 sometimes. I'm lucky.
Yeah, but
people don't want to leave their house.
But with this group, and specifically with this page, we can connect with people who share our interests, who are like-minded, and that way you can continue to network and get ideas, get inspired, and want to take some actions. Because I'll tell you what, I used to think that doing all of this was very limiting, right? Being overseas was limiting, but I realized now that it was simply just a mindset. And now, because of technology, we're very fortunate. There's so many ways to connect with people and still do stuff even while you're stationed in the remote place like Misawa, or even in Korea. So that's there. So go ahead. I don't know, Julie, if you wouldn't mind, when you get a chance, you could share the link to the chat group or to the page in the chat. That way everyone who's here can just easily click on it and request to be a part of that. And then Derek, you could go ahead and get to the next. Oh, okay. So this is an upcoming event. So if you're already familiar with Active Duty Passive Income, you'll probably already know that next week they're hosting their annual military real estate investing conference. It's going to be held next week. You see the dates there, the 27, 29. And for those of us who, I think I met Chad. Chad's actually going to be there. So that's super cool that he's going to be there in person live, because that's definitely the best way to experience it. But for those of us who are in Guam or Japan, Korea, and it doesn't necessarily make financial sense for us to fly all the way over there and be jet lagged the whole time, ADPI has actually given all the hosts here a link that gives us access, like free access to the virtual channel. So if you are local and you have direct, you can connect with so either Whitney or Ari over in Yokota, Derek and Misawa, Julie, Kyle, or myself here on Guam. We have the link that gives us free access, and so if you just connect with us, we're able to participate. So definitely check it out. I was there in person last year, and it was a really, truly great experience. So just again, think about what you experience here, think about adding, 50, 100 more people who share your interest and passion for real estate investing and just finance talk, being able to connect with them. So, right, next. And then if you've seen most of the hosts with our virtual backgrounds, this is to just share with you that we do have some availability. So if you really enjoyed this presentation and just kind of be a part of this conversation, all the hosts here, we get together, we essentially become each other's mastermind. So when I think about what I've been able to do in terms of real estate activities while stationed in Japan and now living on Guam, the confidence to be able to do that and the support that I was able to have was truly from this group. I wouldn't have probably take a lot of those risks because I had a sounding board. And so this group has truly been really amazing for me and what I'm trying to do with my real estate portfolio. And so if you happen to be, if you look at the red, if you or anyone you know are in any of those locations in the red and you want to see what this would entail for you, please reach out to any of the hosts and then we could tell you more. Next. All right, well, that's all I got. Thanks, Derek. I'm going to turn the floor over to you for closing remarks.
Awesome. I appreciate it, Anne. More importantly, Tiara, we appreciate you taking your time out of your day. You said you're West Coast, so I'm usually pretty good with math, but I don't know what time it is there right now. I know it's not early. So, but we greatly appreciate you taking your time to spend it with us today and educate us a little bit on the really just the surface level of taxes, because this goes so much deeper that oh my Lord.
Yes, thank you for having me.
That being said, so I will leave this up. Again, the entire point of APDI, these meetings, beyond the educational piece, is the networking portion of this. So I will leave this up and stick around. Some of the other hosts will stick around. Tiara, feel free to stick around or leave. I'm sure you have other things that you need to get done, but if you want to stick around, feel free. And anybody that has questions or wants to stick around, and this is completely open floor, now's your time to do that.
Derek, could you go ahead and turn off the recording so that kind of closes off the formal portion of this event?